Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. My name is Doug McKay. I'm the founder of Quantum Leap. Each morning we come into these pre-market sessions to take a look at the market, macro to micro, structure of the market, and then drill down to our targets and our trade levels for the day and our main hypotheses for trading. This is a subscription room. If you want to come in and join us, come in for a free trial, just let me know. I'll put up my contact information in just 1 minute. Before we do, please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see at Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan and risk metrics. Okay, so if you want to contact me, there's no website. This isn't a commercial venture. Just send me a email to quantumleapfutures@gmail.com or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. You will need a Skype account for the room, but it is free. And then, of course, if you want to see more of these videos, just do a search on Quantum Leap Futures. And if you like what I do, follow me on Twitter. All right, let's go right to the news this morning. Of course, today is the Fed day. We have FOMC at 2 o'clock Eastern time today. We did have news at 8:30. Building permits beat, housing starts beat, and huge jump in foreign security purchases. Not a surprise in terms of the Canadian foreign purchases just because of the Canadian dollar right now. 9:15 we have capital utilization and industrial production. So we do have news 15 minutes after the cash market opens. Then we have flash manufacturing, crude inventory, and then of course the big one that everybody's going to be waiting for is at 2 o'clock. And remember, this Fed announcement does have a conference with it. Of course, everybody is expecting a rate hike. We're expecting at least a 0.25% to a 0.5% rate hike. So big news. Going to be probably make a move early today and then settle out and go sideways, but you never know. So let's take a look at the market just to get an idea where we are. I always start with a basic candlestick chart and 2 moving averages, 9 EMA, 20 SMA, looking for slope and separation, strength of the trend, where the trend's being challenged or violated. You see we violated the long trend that we had in August and September, took it back in October, held in November, and so far we've challenged it, but we're holding it in December, and we're back trading 2048.50, very close to the open of the year at 2055. On the weekly, we've got some consolidation going on, no real trend right now, but we have popped back up above the 9 and the 20 on the weekly. On the daily, we have had that tire low on the Mr. Sneaky setup, and so far, excuse me for 1 second. Sorry about that. And we've taken back, we've got the lower high, we're above the 9 and the 20, we're inside the, we're above the 9, below the 20, we're challenging the trend right now. Of course, we've got Fed Day, we don't know what's going to happen in terms of moving forward after news. We do have a start of a trend on the 4-hour, but we do have a naked cross down here at 2025. So we are trending up coming into the news from yesterday. Going to the 1-hour, we do have a strength of a trend right now. Very strong trend, good slope, good separation. Challenged it here, but took it right back on the 1-hour. So the trend is still continuing up. Same thing on the 30-minute. Same thing on the 15-minute. And same thing on the 5-minute. We do have a couple naked crosses. Now, there is some naked crosses up above, which have been there, up in the 2080 level, 2080 and 81 on the 30-minute and the 1-hour. So something to keep an eye on as a possible destination if we really get into a rally. One of the things I want to look at is the geometric. You can see that we came up as anticipated and tested the center line of this this downward sloping fork, and we're breaking above. So a move up to the upper line today is going to take us all the way up into the 76 level. I just wanted to point that out. Okay, so let's take a look at the structure of the market. So right now we're trading 48, right around the CHVN at 50, former microcomposite VPOC at 48.75. We did gap up, so we had a gap and go day yesterday. You can look for the possibility of a gap and go again today. We are above the range high from yesterday. A lot of times when you get a gap and go, you get a second gap and go. I don't think it's going to be a gap and go simply because of the news. I think we're going to get some type of a move down off that news, and we're not that high above. All depends on how high they rally it before the news. Key line in the sand today is going to be that 42 again. Anything above 42, look for them to chop around between the 42 and 66, and I'd be looking for a move up into the 60 and a quarter, and of course up into test the year open at 55. Below 42, then I think we got a rotational day, down towards that 2013 level as a challenge on the news, and then maybe a pop-up. It's almost impossible to gauge what's going to happen on the news, so we really have to look at coming up to the news and then react off of it. But setting your levels up today, the Fed news can blow right through them. I mean, the big targets above and below us right now is going to be the 2003 area below, and possibly a test of the 1900s. And the other big target above is we've still got those naked crosses up there at the 80 and 81, but more importantly, we've got the composite VPOC, or the most traded price, up here at 79, and we've got the micro composite VPOC, which is now running from October the 15th through till yesterday, and that micro composite VPOC is up here at the 73 level. So we do have some main targets up here. Any type of good news or absorption of bad news and any rally, I'd be looking for a move into those if we get a strong rally going to the upside. Let's take a look at what happened overnight. Overnight, I posted in the room yesterday that there was a measured move up into 43. We hit the 43. The extended target measured moves was 45. We actually extended up to the 50-50. That's right near that CHVN, by the way, at the 50-50 that we're just below right now. So just showing you how the long-term price acceptance comes into play. So our overnight high is up here at 50-50. I'm going to take this this target off because we've got the overnight high as the target, 50-50. And our overnight low is 35. Basically, one tick below our RTH VPOC. And then I doubt that we're going to get a VPOC shift. We could, but 47.75 is the overnight VPOC. I'm going to take this target off because we don't need that. There is a LVN right here at 46.75, which is just above the 45.75. So I'm going to be using that range right there up to 46.75. I want to be above it to be long. I want to be below 45.75 to be short into the targets below. And then there's another LVN down here at 44. That's going to be my next target below the 45.75. And then below that, we've got the 40.75 value area high. Anything below that, I'd be looking for a closeout and a move back to the midpoint and the VWAP from yesterday with continuation to the overnight low. So my first target below is going to be right here. And once we're here, I don't think we're going to, we might bounce a bit, but I don't think we're going to bounce very much. I think we'll come down and take out the overnight low and the VPOC, especially if we leave this overnight high alone. And then below us, we've got the 33.75 value area low. Below that, really, it's going to be all about this 29.50. And then below 29.50, we don't need this anymore. Expand this out. Below the 29.50, we've got the 22 level, and our daily ATR right now is ranging 29.14. Our overnight high 20.50.50, which gives us a daily downside target of 20.21 1/4. We also got that key line in the sand at 19.50, and then 15.75. Our weekly ATR is all the way down here at 74.50. Our ATR target to the upside, now this is interesting because our weekly ATR target off of that 1983.25, our weekly ATR is running 75.20, and our weekly ATR target to the upside is 20.58.50. But our daily ATR target off of the low overnight of 35 is up here at 64.25. So our daily ATR is actually above the weekly, which a lot of times you see this, you'll get into a trend situation for the week, and this could be part of our Santa Claus rally if we come up here after the news and start getting above the weekly ATR and take out that daily ATR. Of course, the week open is 20.55. I think it is well, I'm sorry, the year open is at 20.55. I think it's well within range today. I think that at some point in time, they're going to try to go for it. Either they go for it and get there for before the news, or after the news is absorbed and we rally, we could go there. I mean, it's a crapshoot today in terms of what the market, how the market will react. It's pretty much built in. Everybody's expecting a rate hike, so I think the initial reaction will be a plunge, and then I think we'll find a rallying point and we'll rally up. Currently, we're trading 48. My main hypothesis is to come down, probably test the range high or this 40.75, then come back up and rally into 55. I think we're going to come in to the, based on where we're trading right now, we're going to come in somewhere near the year open for the news. Of course, if we get below the 40.75, that puts us below our key line in the sand at 42, and then I would expect to move back down into the 35, 33 area. I don't think we're going to go that far this morning. I think the range for this morning is going to be between this 33 and the 55 area. But watch to see if we still got 30 minutes. We're coming down a bit. If we get an open outside of range and outside of value, look for possible initiative buying and a push through to the overnight high and the year up to the year open at 55. If we get two-sided trading, then I think we dip back in here, and I think it'll all be about whether or not we hold this value area high. Below it, then I think we dip back down lower, and we're going to chop inside of yesterday's value area and chop in this area again. We anticipated that we were going to trade within this range between 22 and 42 yesterday, and we pretty much did with a little bit of a poke up above it. So that's what I'm looking at right now. The Keltner is above the center line. The upper Keltner is 53. The lower Keltner is 41. So those fit within our levels. In terms of gold, gold has rallied this morning. It's come up and it's coming up. We've got the 77 above us now. It's been shifted from that 75. Balance is here at the 70 level. We had a fairly decent move this morning. I think gold is going to chop around in this area, and depending on what happens with the Fed news, if we pop above, I'll be watching this 77.20 very closely, and if we get above it, then I'm looking for a big move up into the 1095 level. Same thing, if we get below the 64.90 level, then I'd be looking for a big move down, and I don't think that the support is going to be here. I think it's going to just flush and get a huge move in gold. I'm expecting a move in gold today, whether it's to the upside or the downside, but I'll be using 77.20 and 64.90 to define which direction that could be. Anyway, that's going to be, I'm going to keep it short this morning because I've got somebody coming over my house. I probably won't be able to call the open. My brother's coming over to discuss some trading accounts, and I will be, if I see something, I'll call it out. I doubt I'll be making any trades myself this morning unless I see something really good. Anyway, that's going to be it. As always, trade well, trade safe, and I'll catch you on the flip side.